Well, g'day there, everybody. What this is going to be is a quick stock update on Facebook, and we'll also talk about IBM and Goldman Sachs. They have just reported their earnings, and they have gapped in opposite directions. So I'll walk you through those two particular stocks as well, and have a look if there are any potential trades, something I spoke about over the weekend in that pro analysis class. But before I get there, let me just walk you through Facebook. Facebook on Tuesday saw a really nice positive day. I mean, it was up another $3.13 from our original entry here at 157.32. You can see that we've made about $5.50 on this trade, just over. So what you want to be thinking about with this particular trade, whether or not you are in it with real or virtual funds, you want to be thinking about, well, where does my stop need to be placed? And essentially, if we didn't have earnings, which is expected, or at least the earnings date is announced on the 26th of July, I'd simply be trending this with the rising exponential moving averages. You can see how price is really pulling away quite strongly from both the 10, the 20, and also the 50. We're also seeing separation between the three. So again, this is showing us that the acceleration of this trend above this recent resistance area that we've been, or it has been a little bit problematic to overcome, is now done. It has finished that gap, which I spoke about also going back 2 weeks ago between the trading session of Tuesday and Wednesday. We didn't see the pullback. Instead, we've just seen this continue to the upside, which has been tremendously profitable. However, going back into the discussion, because we have earnings, I would be trailing a very tight stop. Essentially, what I'd be doing is looking to liquidate the trade if it did pull back and really move below the low of Tuesday's candle. Now, I'm not necessarily expecting that to happen, but if you do see any slowdown with candlesticks up and around this location, it would also be a very good idea to actually close out some of this position. Not all of it, potentially maybe 60% of the position, and just be happy with about that $5.50 that you've seen worth of intrinsic value flow into those call options. It is a tremendously profitable trade and something that you should be protecting at this particular point now that you've made a decent sum of money and that you do have to liquidate this trade prior to that earnings announcement. Now let's go back into the pro list. Goldman Sachs has been a stock which did report. It reported yesterday, and you can see that we actually closed down very close to $6. It is holding relatively stable in the after hours. I've been looking at it throughout the night. And leading into Wednesday's trading session, this really sets up a really nice continuation trade. The reason for that is because we have been in a bullish type of trend since the lows over here in about mid-2016. We've sort of rallied off it on a number of occasions, and even prior to the earnings announcement, we were getting very excited about the potential of a breakout above 231.22. Now, this is essentially back on the table. What I'm not prepared to do at this particular point, even though we did see a bearish gap, and again closing down very close to $6, is to have a bearish trade set up on this potential or on this particular stock. The markets themselves are still relatively bullish. They are still breaking out and continuing. They are more or less moving sideways to begin this week, but we'll see how it all unfolds as the week continues. But really what I'll be looking for is for Goldman Sachs to eventually break 231.22. If that happens, you've got two targets, 240 more or less, 239.95, and also all the way up here just shy of $255 a share. This is looking tremendously strong, even though we have seen Goldman Sachs pull back, especially on Tuesday in reaction to that earnings announcement. But we do have this very strong area of support. This is the trend line, which has been in effect since 2006. It's also coinciding with that rising 200 simple moving average. And of course, we are still pricing in higher lows. So we'll see what happens around this pivot at 222, maybe even as low as 220. But really what I'm sort of being, I guess, disciplined and patient of is for the simple breakout, which I do assume is still going to happen in due course. It might not happen tomorrow, it might not happen this week, but if we start to push above 231.22, this is a fantastic earnings continuation. We didn't see a major gap. We didn't really see any gap whatsoever. And that really sits well for us moving forward. I mean, I love these types of trades now that we've built the structure up and around this 228, 230 area on multiple of occasions. This is just primed to take off if in fact price can get above that trigger. Also, this is a little bit of a pre-market update for Wednesday. IBM has come out. It has reported earnings yesterday after the close. It is currently opening or looking to open in the pre-market hours at about 149, so shy of 150. That puts us below our macro support over here, which we've been building since early May. Okay, so things aren't looking all that well for IBM. It looks as though we are going to see a continuation to the downside. I've had this target at 140.94. We'll see how the candlestick develops as at Wednesday, see how it develops, and then we'll come back and we'll reassess what that candlestick is on IBM. Maybe it sets up a long day Morobosu candlestick, which would be exceptionally bearish over this support area, or perhaps what we see are buyers come back in. It may sort of set up that of a hammer at support. So I mean, it's a little bit too early to say on IBM. But we'll monitor the candlestick construction on Wednesday and we'll take a closer look at it in the aftermarket hours. I'll do another update for you. Netflix saw a strong gap to the upside. This is a very simple trade as well. I mean, if Netflix really continues above 185.93, this is just a continuation trade. It has continuation written all over it. We did move quite a distance yesterday. We closed up almost $22. So if you don't feel comfortable entering in at 185 at the moment, if you'd rather wait for a couple of candlesticks maybe to see this sort of hold within Tuesday's candle, I wouldn't blame you for that, because your stop at this particular time needs to go below the low of Tuesday's candle, and I understand that opens up a fair amount of risk if you're looking to sort of trade the continuation of this particular candlestick and also the gap itself. The gap itself really sort of resonates as that of a continuation gap or that of a measuring gap, and generally what happens is it sort of marks the halfway point of what is already trend in effect. So what I'll do over the weekend, I'll go back and have a look at the different phases of this trend, and we'll try and work out some levels of confluence as to where Netflix should run to if in fact it chooses to close above and continue above 185.93. Volume was huge also yesterday, which is fantastic for the bullish side or the bullish outcome of this most recent gap reaction to earnings. So it's looking quite favorable. So really that was just a quick recap. Again, on Goldman Sachs, which I'm excited about. That is bullish. I'm not looking to short that, even though it can pull back. Fair enough. IBM will monitor the candlestick construction on Wednesday. Netflix is looking very, very healthy. And just to sort of close this recording, Facebook, I mean, you can see again closing up $3.13. That is a tremendously profitable trade for us, from 157.32 up another $5, $5.50. So I mean, this is all looking quite well, and I've still got my target up here at about 170.71. So but obviously earnings is going to be a problem on the 26th. We'll have to liquidate this trade before we get to 170, which is, it is what it is. Sometimes we can't help this, but you need to be grateful at least that it has been a very nice trade for you. So on that note, everyone, enjoy your Wednesday. I'll be back with you for another market update in due course. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.